Hello, this is Vance, and this is Wednesday, September 16th, 2015. These are the CL trades for today using the slime method for price action. It was a heck of a day today on the CL. Price went up significantly. We had the DOE report, and after it came out, there was a 2.1 million barrel shortfall or shortage this week. More gasoline, of course, but that really spurred prices to head up very rapidly. And so we had a significant increase in the price of oil. I talked a little bit about that yesterday afternoon. I said that the movement that we had late afternoon kind of retraced back to where the daily high was yesterday, may be some precursor to today as far as the DOE report was concerned. And because we had a shortfall shortage, it really took price really high, really fast. Again, from the overnight, let's take a look at the charts, and I'll give you an idea of what I saw first thing this morning. It started out kind of slow. First couple of swings, I drew this trend channel in there pretty right away this morning. And so when you draw a trend channel like this, you want to do it off the first couple of swings, high or low. And you can see there's the first couple of swings here. It retests here, and I really respected that for most of the morning before the report. And you can see that, we had a retest right here, pulls back, and then we had really confirmed this area, confirmed this as the bottom of it. You can see it retested here, and so looking at from that perspective, drawing these short-term trend lines, I was looking longs for these ones here, for these trades. So you can see that on the short-term trend channel, price comes down to this area, breaks the channel, pulls back, and then a very strong bar here. Figure we're going to be testing the other side of the channel. I mean, originally this is why I had it like somewhere in this neighborhood. Could be steeper, but as long as it keeps you on the right side of the trade is the important thing. And you can see right to the tick almost. Now, really no way to trade back here. And if you're trading here, it's kind of counter trend because the trend looks like it's upwards. And so you stay with the trend. And so the trend, even though there's these pullbacks, the trend looks like it's higher. There's no lower low here. There's lower highs throughout this area. And as a result, I would stick with the trend. Now, right up until, you can see this is the same kind of thing. You had a break. I didn't really look at this as a break. It was more like first pullback, second pullback to the EMA. Didn't quite make the trend line, but a fairly strong bar bounced right out of here like this. It's also second entry long, first entry, second entry long. I feel like two failures back to support or resistance. This in this case support. It was enough for just your first two targets came back, and then it came back again. So you have this first pullback fails, second pullback, and maybe even a third pullback, but this is a second entry long. So you see price is 0, 1, second entry long again. Rejection, add these two bars together, and you see a little bit higher now. Now we're getting close to 10 o'clock, and then prices started to stack up here in anticipation of the DOE report. And you see that really happens somewhere in the neighborhood of 9:45, 10 o'clock. Report's going to be out at 10:30, or if it's a holiday, it'll be 11 o'clock the following day. But give it a half an hour before the report, you start seeing things will typically slow down on the 800 tick chart, unless somebody knows something, I suppose. But you'll see prices stack up, get slower, not a lot of movement, tight trading ranges, and so forth. And you can't really tell in anticipation what's going to happen. So it really doesn't make any sense. I mean, if you're going to trade already, then you got a runner going, and your stop is break even plus 1, well, then you can hold on to it through that. But if that's not the case, don't really want to put on any new trades right here. It's really too close to the area. I mean, especially this trade right here, this is a 10, this is a 938. This is even cutting it close. But if it would have stacked up, I would have looked at closing it out. Anything like when prices start backing up like this, if you put a trade on and we start getting overlap, or if it looks like a good setup and it kind of turns against you sort of thing, then it may be time to kind of close out the trade, maybe with break even or just a small loss. But if it doesn't go within the first bar or two bars, unless there's really strong support or resistance and you've got a real comfortable, you had a good entry, then you look at closing the trade out, which is 1 or 2 ticks gains. There's always going to be another trade, so don't worry about that. I mean, the whole key is don't worry about keep your losses small. That's really kind of like a tenet to use. That's really important to do. If you're taking your full stop losses every time, I mean, there's two schools of thought. If it's just not working out the way you anticipate, because if you put the trade on now and it's completely hands off, you have to realize that if you wouldn't put the trade on in current time, and you've got the trade on, you've been sitting in trade for a few minutes, then there's probably no reason to kind of stay in it, because things have perhaps changed, or you didn't quite read it right. one thing that I was watching an Al Brooks video some time ago, and Al talks about trading ranges and trends. And part of it, I've talked about it just a couple of days ago when I did the intro to the slow hand method for price action. Either prices are trending or they're in a range. And what Al looks at as a 5-minute chart is a single bar is either going to be a trend bar or a range bar. And he refers to a doji as a range bar, and because there's no movement one way or the other. A trend bar could be either up or down. So if you have a bar with a large body and it's green in this case, then it's a bull trend bar. If it's red, it's a bear trend bar. And if it's a doji, where it has a very small body, it's going to be a range bar. And that's what he looks at. So he looks at each individual bar as either a trend bar or a bull bar in context of the overall trend. And the overall trend in this case, if we look at this area right here, this overall trend was up. Generally speaking, you see you got higher highs and most of the time and lower highs as it moves up. You can see where this trend line is. You can see where the touches were. It really confirmed it, and it kept moving its way up until we had the DOE report. On the DOE report, that news came out. We don't know what's going to happen or how the market's going to respond to that news. But what inevitably happened is that we had this stacking up. Price found a purchase in this range, and this painted very rapidly because as soon as news comes up, there's let's take a look at it. This is 1030. See these bars here? This is 1030. So this is a bar here, 1030. This is 5 minutes. From here to here is 5 minutes. So we had 2, 4, 6, 8, 10, 12, 14, 16, 17, 18 bars. 18 bars in roughly 5 minutes, 800 ticks. So you can see how rapidly that thing was painting. You just don't know which way it's going to be heading. And look at the size of these things, right? Somewhere in the neighborhood of 20 ticks from top to bottom. There's almost 30 tick bars. These very large bars. Now, but it's still a range. It just paints faster because there's more information coming in. So you can see these bars pull back. You can see the range. This is the top of the range. This is basically the bottom of the range. And when price got to here, as time progresses, this is 10:45, 15 minutes later, and this is like 10:50. So it's just before 11 o'clock. Here, now, this is before 11 o'clock. Typically, I wait for usually a half hour or so after the news report came out. However, because of in this particular case, because of the reduction in the amount of oil, it was kind of a bit of a drawdown, and because of the yesterday afternoon's overnight, the general trend was up. I thought this was worthwhile to look at. I figured the trend was going to be on the higher side. And when this setup occurred, we had our first pullback, failed, second pullback, couldn't go any lower. Even though it's top trend, it's really like a breakout pullback. We had two failures back to where this trend channel is. A very strong bull bar right here when it completed. So I took a long here, and it turned out to be really ideally, maybe down here, but I thought it was a really good trade because it really rode all the way up here. There's really no other area to get in here. You could add on, but you see it was just they gapped up here in this area. We had prices just kind of ran away, and so it went from this area. So let's take a look at the low just for the news. 45.43 touched at the daily high at the high at 47.35. So it really was basically unbroken. $2 in a fairly not a long period of time. This is at 11 o'clock, and this is 11:15. So we're talking about 15 minutes, or pardon me, this is a little bit longer. 25 minutes. So 25 minutes from here to here. That's a fairly dramatic increase. So, there's a lot of pent-up buyers. Buyers jumped into the market. I guess they just wanted to wait, see if there was going to be a drawdown, and they just jumped on this bandwagon. When price got to this area, you can see that we have a break of this channel. Listen, see that. See the touches are here to this one, this area right here, and then we have this break of the channel, closes outside the trend channel, moves its way up, and right here is a second entry short. So you can see that price makes a new low first entry, pulled back second entry short after breaking the channel and after it closes outside this trend channel. So you could have taken a short here. It's an aggressive trade. It does look at where it comes back down to. It comes back to this area. So this really turned out to be a spike in channel. Price spikes up and then it starts to range again. And so here is another second entry short right here after it breaks this channel. I marked it in green because there is some prices are stacking up over here, and you can see right across this area. This is the high, but if you pull it down to where the most touches are, right across these tops, you can see that price really respected this line right here. Now there's a reason for that. There are sellers that are waiting to are shorting right here and have overwhelmed buyers at least in these areas. There's been hesitation, couldn't get above this area. Let's call it 47.15, just say call it $47 mark. And so prices kind of vacillated between that area over the next little while. Second entry long here, but these longs, you're going to take these longs, and if this is the bottom of the channel right here. First it's here, and it moves down a little bit lower, and then you have some confirmation here. And I actually was thinking that maybe this is kind of a down channel like this here at first, and it does kind of fit. Okay, but it didn't really, in a very short range, it's really kind of chopping around. So it did hold for these couple of trades, but I was looking at more along the lines that it's more rangy, and as a result, I was looking more of a lifting up and out of this area. So I was really trading it more like a range as opposed to as opposed to a trend, a downtrend. Despite the fact there are some trades here. If you're getting in, if you limit in, you would have done okay with these ones here. There's enough room to get out. I marked these ones as longs, but again, these ones you have to really limit in on these trades. You can't stop. You can't stop a buy stop. It has to be a limit order. For price to come back down to you, so that you have enough room to get to these double tops across top of this range. We had a failure. It failed at the top of this, which is almost like right across here. Another second entry, a little short here, and then price again failed off in this area. Again, I marked this one down. This is the bottom of the range. You can see when it got down here, there was a little bit of hesitation, but then we had this emotional bar went further. And this, I thought, was more along the lines of even like a measured move from here. Price moves down to here. Pulls back first time, fails. Second time, fails. You see, move down to this area. So, but this is kind of stacking up. Buyers and sellers are just kind of duking it out. Takes it down a little bit further in this area. You can say that maybe even this is a move down to here. Pulls back first time, fails. Second time, and down to this area, like so. Price gets down to starts stacking up again down to here. And we're kind of respecting this trend channel. It's kind of a loose channel down. Gets to this bottom. First pullback, second pullback down to here. You really have there's a second entry. This is a second entry long from off it. Well, not really a second entry long. Kind of squint your eyes for the second entry long. New high here. First pullback, second pullback. So it's really two legs back to where support is. Another place to take a trade right here. Then you have another pullback, first pullback, second pullback, another trade to take here, and here's another measured move. So this is pretty late in the day. I mean, looking at this stuff, honest with you, I wasn't really looking at trading this at this time. I was more along the lines I'd finished pretty early today, so I was done here. It's quite a few trades, but again, this is really the highlight of it. This movement. Don't really see. You saw this kind of movement that we had, and it's like there was a lot of movement going up. Had a pullback, and now we're really right at the top. So we're close to 47.18. That's just 2 weeks ago. We were at end of August. We were at $37, and now we're $10 above that. So the price of oil has moved 30% in the course of the last month. So that's a pretty big move. And so it's a percent a day, or somewhere in that neighborhood. That's a lot on the upside. So it's been, today, if you're on the right side, if you're taking longs and taking it to those areas where you can see, confirmation sort of thing, you've done very well. Not a lot. I mean, there was some shorts here. I wasn't really looking at it. I mean, maybe this area right here, but man, that's late. That's after 1 o'clock. by 1 o'clock, most of the trading is done by from 9 to noon, like after lunch for before noon. So 9 to 12 Eastern Standard Time. That's it for now. 16 minutes. If you have any questions, please let me know. I mean, I'll talk if you have any questions about ranges or anything else. You can get hold of me as far as email is concerned, or send queries this way. And that's it. Bye for now.